Zombie apocalypse.
This is Adnan Global Access Forex. Good evening, everyone. In today's session, we are going to talk about what you call the average true range indicator, as known as ATR indicator. So, what is ATR indicator? ATR indicator is simply an indicator that used to measure volatility in the market. What do you mean by volatility? Always every aspect of market in any financial instrument is moving in two directions, from a low volatility to a high volatility, or from a high volatility to a low volatility. Let me share an instance. Let's say low volatility, low volatility, low volatility, that's one. High volatility, sorry, my handwriting is not that good. So let's put arrow here. So always market move from what? From a high volatility to a low volatility. That's from high to low. Every market move from a high volatility to a low volatility, or it will move from what? From low volatility to high volatility. That's why we spot breakouts, which is part of what we are going to discuss today. So please give me your attention here. Let me break down everything you need to understand with this special indicator, because it's one of the most important indicator in the forex market, and you can be able to use it and identify some kind of good performance in your own trading system. So let's move. So what you should all know from the beginning is that market always move in from high volatility to a low volatility, or from a low volatility to a high volatility. That's explained. Okay, then number one, what we are going to discuss today is what is average true range. As I explained it earlier, average true range, or we are going to talk about this average true range. Number two, we are going to talk about how to find explosive breakout trades before it occurs using the average true range. Yeah. And number three, we are going to talk about how to place a proper stop loss so you don't get stopped out prematurely. A lot of people will say, hi, AJ, I put my stop loss, market hit your stop loss. Me personally, right now, market don't hit my stop loss, because market don't know where my stop loss is. So it will just walk and go. So if you want to know how to place your stop loss like a professional trader like me, kindly join me in this video. You're going to have the full details on it. And the last on the list is how to predict market reversals using this one little known trick that I want to share with you. It's a personal strategy I'm using, so I want to share with you this my personal strategy of how I used to identify breakout trades using the average true range indicator. So let's talk about number one. Number one, what is average true range? As I told you, average true range measures the volatility in the market. Let me give you an instance. It measures volatility. Let me give you an instance. You see, this place, this area, the market has been what? There was a low volatility from the market at this point. Low volatility. The volatility from the market is very low. That's why you see the ATR value shrink lower. You see, that's why the ATR value shrink lower. That's how you should understand. It shrink lower. So just seeing this alone should be able to tell you that yes, the market is in low volatility. The market is in low volatility. So that's what you should understand. So number two, you need to understand that after market moves from a low volatility, what will happen? As I explained earlier, market move in two different things: low vol LV and HV, higher vol. You see, low vol, higher vol. So look at this market now. Immediately after this breakout here, there's a breakout here at this level. Excuse me, let me use the trend line. There was a breakout at this level, and that was the reason for this spike in what? In volatility, because the larger the candles, the higher the ATR value. Understand this clear. The larger the body size of the candles, the higher the ATR value of that particular market. So that's what you should understand. This is Adnan Global Access Forex. For those that are new to this channel, this is Adnan Global Access Forex. We're always here to help all struggling traders trading forex, stocks, cryptos, boom and crash, everything. We are here to back you up with a very suitable and good strategy. You can always check us at on our website agaforex.com, agaforex.com, agaforex.com. You can check on our website agaforex.com. You can see you can always have us here. So that's that about that. So you always need to understand market move from a low volatility to a high volatility. This is our website where you can always access us. So look at this point now. At this market breakout here, the volatility increases. That's why you see the ATR value will be high at this level. Let's check the ATR value from each level. Let's check the ATR value. At this level, the ATR value is around, is it on our chart? See, around 23, but around here, around 57. So you see, that's what you should understand. This is Adnan Global Access Forex. So you understand that market move from what? So number 2, you are going to find out how you can find explosive trades. Okay, let's move on. So look at it from here. Let's reference with this low here. With this low. This is it. If you look at this market, let's check the average true range of this market at this level. In this market at this level, it's at what? Okay, 114. And let's check how many pips is this candle. You see, more than 200 pips. So this is telling you that this market has moved more than 200 pips on its weekly candle, but the average true range of that market at that level is just 114 level. At this level, it's just 114, just 114. But the market was able to what? Was able to capture that long trend, 200 pips. So you should know that this market has already what? This market has already been what? Has already exhausted. So you cannot start selling at this point, even though you see a selling pressure here. Personally, me myself, but I notice see these big candles that this market is producing. But look at the average true range of that market. That means that market has exhausted its energy. So it don't have enough energy to push down the market below. So the market needs to retrace up, come and gather enough momentum before it can be able to move down lower again. That's what you should understand. And let's check for a possible breakout here. You see, but this one is not even. This one. Look at it here. Look at it. This is exactly where that market happens. You see, the market has been trending up, high volatility here, but what happened? Just some few minutes or some few time, the market started what? Started the volatility started going down, and that's when the market started this range in here. See, small body candles going up, going up. Well, so I cannot sell at this level, no matter how I want to sell, even though I see this bearish momentum here. But because of the average to range at this level on the weekly chart, on the weekly chart is at the weekly low, and the market is what is still moving times 2 of its normal average true range. So that means I cannot enter the market. I will just wait for a reversal, and we got a confirmation here. You see, after the market come down here, pop a base. This is just normal, that double bottom scenario I always told you. Market come into this market, break this low and come and form another low and come up here, come down, from this this double bottom base, go up here, strike this high. This is the neckline. So immediately market break these highs. This is why you'll be targeting to enter your trade. This is why you'll be targeting to enter your trade. Let me show you. Let me show you. This is why you targeted your trades. I'm sorry. This is why you target your trades here. Immediately market, this candle close above this one come and retest it. Immediately at this pin bar at a support that turns as a support level that turns resistance now. You see, look at the pin bar here. Immediately at this pin bar, that's where I place my trade and go long, and I can hold the market for as long as I want. So that is how to identify a breakout using what? Using the ATR indicator. Let me explain something for you, please. Some people are mistaking these things. Average true range is not a trend following indicator. Let me why. Okay, the reason why average true range is not a trend following indicator is that sometimes you'll see a market will be trending up or down, but ATR value is trending down or high, because anytime there is always increase in volatility from the market, there is always a trend in the ATR. The ATR will always go high. Let me show you this level now. Look at it. When market was consolidating here, the ATR value was shrinking here. But after this breakout that lead to this move, see where the ATR value go up here. So try and understand these things. They are very, very simple and clear to understand. All this business of forex trading and everything, if you want to be consistently making profit in it, you have to have patience, understand the concept, know how to adjust yourself with the concept, know how to monitor all aspects of that concept, and that's when you'll be able to make the good amount of money. This is Adnan Global Access Forex. Please, if you find value in this video, if you ever find value in this video, don't forget to like this video, share this video to other people so that they can be able to watch us and get the same value you are getting from it, and let's make the money together. So let's move to the next one. The next one is the most important part of average true range, which is how to identify, how to place proper stop loss so you don't get caught, you don't get stopped out. Honestly, the reason why I'm always making market have never hit my stop loss in trading, Well, I'm not saying market, but honestly, since that I became a professional trader, market has never hit my stop loss stupidly, because I knew where I placed my stop loss and I know where my stop loss will be. So definitely, market will not hit my stop loss. Definitely, yes, of course. Because let me give you an instance here. Mm, let me get a good point, because I want to make it clear. Or let's even put let's use moving average. Let's use 20 and 50. Let's use moving average green. Insert another moving average 50, making it black. No, black, making it yellow, making it 50. TEMA. So look at it now. At this level now, at this level now, assuming this is a strong level, because market has respected it how many times? Let's check. 1 time, 2 times, 3 times, 4 times, 5 times, 6 times, 7 times, almost did not touch here, so almost 7 times. So market has respected this level almost 7 times, so you should know that it's a very strong level. So please, if you are going to place your stop loss at this level, you see the market, let's assume this is your entry, this is your entry. So don't just come and place your stop loss above this high here. Very, very wrong, because you can see the market will, if you place your stop loss here, the market will definitely uh, touch here, touch here, touch here, touch here, and even touch here. So the market will just, at any time the market retrace up, it will hit your stop loss. But when you use what you call ATR, let's check. Let's use this candles here. Let's use this candle. Let's use this candle. So let's check the average true range of that market at that level. You see? So let's check the average true range value at that level. You see, let's say 10 pips. Let's 9. Let's say 10 pips. Okay. This is daily time frame. It should not be 10. 109. I think let me use the smaller time frames. I think it will be better. Something like this. Exactly. So we are selling from this highs. So anytime the market push up, it will hit this stop loss we placed here. So you see, the market push down, push up again, and hit your stop loss. So if you want to place your stop loss, make sure you need to understand is that market will always trying to stop you out of the market. But for you identifying how you can be able to place your stop loss, let me show you. Assuming you are using this candle, you sell market at this level. Okay, so you come and check the ATR value here. ATR value, this candle. Let's check the ATR value first. Let's see. ATR value is 45. 4 hours chart is 45. It's 45 pips. So let's check the total pips. highs and the lows of that candle. 60, 18, 68, 16, 15. So you see the average true range of this candle is what? Is almost 30 pips. So you see 30 pips. What is your ATR value? ATR value is 45. Then you should add 45 plus that point. Let's assume at this level you get 45. You count 45 pips from this level. Let's say 45 pips is here. This is why your ATR will be, so that even though the market even though the market retrace, that market shoot down, even though the market retrace down here, it will only be dancing in this area, so it will not come and hit your stop loss above this 50 moving average. Let's check another example. Let's use step index. Let's use step index. Let's use step index. This is another point. So assuming you sell at this level, you sell here, this is the support, it's the support here, resistance here, resistance here, resistance, resistance, continue being resistance up to this level. I think I need to sell this market. So let's calculate it and see. Let's calculate it and see. Let's insert the average true range indicator. Let's make it 20. So you see, let's even use this current market because this is a live market. Let's use this current market. You see this candle, this is a support. This market is at this, assuming I want to sell this market right now, assuming I want to sell, because this market is as what is at a support level. Assuming I want to sell this market, this is step index, yes, and I want to sell this market right now. Let me show you how to place a proper stop loss. Then let's ask myself, what is the ATR value here? You see 0.8 pips. 8 pips. So let's say what is this candle now? What is, let's check this candle, how many pips it produced, high and low. So you see, look at it here. I have gotten 50, 60. You see, this is 4 pips. So you will add 8 pips from this 4 pips. Sell signal. This is a live sell signal from crash 1000, and I saw the signal. I saw the market going. You see, this is a bot signal. Magic bot give us live signal, and this is where the market is going. You see, market is spiking, and this market will continue going down now because market has changed. Look at it now. You see this market, let me show you. You see this, the whole of this average true range is coming down because of what? There is very low volatility from the market. You see, but now that it started going up, look at it, it started going up small, so the volatility increased. And which volatility is that? The volatility is a bearish pressure volatility. So that means we have a fact. You see, now magic bomb strategy confirmed the signal. Our ATR indicator also confirmed this signal because we can sell here. Why? Because market has changed from a low volatility to a high volatility, and I tell you market move in two directions: LV low volatility and HV high volatility. Look at it. So LV low volatility, HV high volatility. That's exactly what you need to understand with this market or with this trend. This is Adnan Global Access Forex. Nice to talk to you here. The next one is what we are going to second to the last, after we place a proper stop loss. And the last trick, how to predict the market reversals using deleting non-trade. So now let me go down and explain something to you, because I love this average to range, and that's the reason I want to share all this information with you. So look at it now. Look at it now. If you go to the daily time frame, anytime, what you should always tell yourself, anytime market produce an all-time high or all-time low ATR value, and that ATR all-time high or all-time low is close to an area of support or a resistance, you can just sell your market. Let me show you what I mean here. This is an area of value. This is an area of value. There have been what? There have been a resistance for this market, and from this all-time high, we don't have any all-time high in volatility except this point. So if market is at this level, and you notice that this level is also close or align itself with what? With a major structure level, which are all these things you have here. All these things you have here are your previous major structure levels, and you see an all-time high on your ATR, and you notice that yes, this market is at this level and is approaching an area of value. The only thing you need to do, just follow up the market. Assuming this is 4 hours chart, you can go and check. You see, using any candlestick confirmation or other confluence factor that are aligned with your strategy, you can just take your trade and run. You see, from the here, even from the daily time frame, look at it. Look at the average highs here on the daily time frame. This is the average highs. This is the average highs. Okay, anyway, this is the average highs here. This is the average highs. You see, this is the average highs, and you see market retested this level. Market retested this high and retested this high. And after it retested this high, what happened here? There was a word bullish, bearish engulfing candle. I'm sorry, bearish engulfing. This is a bearish engulfing candle, and is what is close to a major level of structure. You have gotten your confirmations. My brother, please let me tell you one good secret that will increase your winning accuracy in this business. In this business, there are a lot of systems that are being built based on systems that may not be favorable to you. Exactly. So what do you need to do all the time? Make sure you are always one step ahead of the market. Respect your stop loss, respect your decisions, respect your strategy. Always follow everything regardless of your discipline on it. That's the only way you can make profit. And apart from that, a lot of people think in forex market you can only make money while trading, which is not. We have number of thousands of millions way to make money, and that's why all those that want to come close to us and get those informations will join our mentorship program, which is always a program that will make you to be an independent trader, and also urge you to make sure everything you are dealing with trading, you always have a backup to it. That's when you start seeing the result. You will make money in different ways in forex, not only from you trading your account. This is Adnan Global Access Forex here. If you get value from this video, please don't forget to like this video, share this video to everybody that you know that can trade forex or that want to join trading forex. Let's get the massive result together. Let's cash out the pips together. Let's milk out the market together. This is Adnan Global Access Forex. Nice to talk to you. See you in my next video. Our next video will talk about trend.